Welcome back. Phil Davis is the founder of philstockworld.com, and he has now our trade of the year. I need a drum roll here, Phil. I need to be doing something to kind of get people excited. We had two great finalists that you just talked about. We talked about Levi's and Corning. Really interesting. I'm going to make people wait for one more minute because we're going to talk about last year's trade of the year before we get to this year's, and that was Yeti. How'd it do? Let's start there.
I love that one because everybody's like, Yeti.
I did that. I didn't know. Yeah.
But it's a combination of things. And in Yeti's case, they were being ignored by the market. They were functioning well. They had a couple of rough times last year, but they were over it already, and nobody was still paying attention to them. So we took it as a very cautious play. We only played them to go to $45. They're right about $45 now, exactly on our target. We had a net entry on that trade for $750. We were not taking a risk. We were in the money. It was $750. We were just betting they wouldn't go down anymore. We said they've been beaten up enough that it's going to stop. They've had as you can see on the chart, they've had an okay year, not great, but it doesn't matter to us because we only played them to have an okay year. And that okay year has turned $750 into over $9,000 on the spread. It's not quite done yet. It'll cap out and be the full 10,000 by the time it's done.
Wow.
And that was our plan for the spread.
Yeah, well done.
So,
that was it.
Fantastic performance.
It is, and I think that's the great thing about, when you talk about what you do is just that, you're not, the stocks don't need to have these massive moves. You price the options for what you think is going to be happening, right?
And yes, and the key is that we, at Phil Stockworld, we have a motto that says, be the house, not the gambler. And the gist of that is that we teach people to be on the other side of the table with options. In other words, most options expire worthless. Most people have terrible experiences with options, but that's because they're buying them. If you sell them, it's great. So we teach people how to sell the options instead of buying them.
And I would think, and we'll get to the trade in just a second, but I would also think with the popularity of options rising, I mean, we saw a huge, much more interest in options over COVID, more people got in the markets. I would expect that value proposition you're talking about gets even stronger.
It does. And the problem is the way people teach options, and I see it over and over and over again, they teach people to take risks, whereas we teach people the exact opposite. I teach people to sell risk. And just like a bookie, we can play both sides, and we're going to win on one side or the other. We can't lose on both sides of our trades.
All right, people who are watching me, Phil, are like going, yeah, get on with it. What's the trade of the year? So I am going to let people know we're ready for the trade of the year, and the trade of the year is Vale.
Yes. Now, again, a fairly obscure company, but they have also been beaten down. They are now trading at 6 times earnings, just a hair under $15 at the moment. And the reason we like them, and again, when you into the finals, all three of these stocks out of hundreds and hundreds that we looked at seriously were the most likely, incredibly good chances of making their full amount. We're putting all three in the portfolio. But when push comes to shove, it's about who could be derailed during the year. So Levi, very poor recessionary environment. Consumer trends can knock them out. It's possible some other fashion trend could kick in and push them out, like Lulu kind of stuff could be more popular for a year or two. GLW, it's possible that another company would invent something that supplants them, whatever. But Vale, you're talking about an iron ore manufacturer that's not in Asia. They're in South America. So they've got a pipeline to the world's largest consumer, which is us. The second largest, maybe China's a little bit bigger, but they have such a huge shipping advantage over overseas manufacturers that they're going to be a go-to source. And we already know infrastructure spending uses a lot of iron. Automobile manufacturing uses a lot of iron. And these things are not likely to be knocked out. And again, like I said, though, they've already been beaten down to a point where you'd think they were going bankrupt, but not at all. They make plenty of money.
I guess,
so we love them.
Yeah, and we'll get into the actual play itself, but I'm just thinking, I guess it depends on the depth of what you think we're about to go through for the next year looks like. But you're saying it's already priced in that it's going to be a hard year for them in terms of people concerned about a recession.
Yes, I think the real tipping point for Vale was that China just said they want to build up the rest of their economy away from real estate. And that's a huge move into more infrastructure and things that are going to benefit the iron ore industry. Iron ore prices. Oh, another thing, iron ore prices are starting off this year. So right now, iron ore prices are significantly higher, maybe 30–40% higher than they were last year. So the comps are going to be fantastic also for these guys. And that's that catalyst I like to see going into the beginning of the year.
All right, let's get into the play. We'll bring it up and take us through how you want to do this.
So for the play, and by the way, if you own the stock, they pay an 8.6% dividend on top of all these other great things. But we're going to sell the $17 puts. This is another one with an aggressive sell because the stock is at 15. So we're selling $17 puts for $4.10. That pays us 60. That pays us $61.50. Then we're buying 20 of the 10-15 bull call spread. So we're playing the stock to stay at 15, maybe go to 17. If it doesn't go to 17, we're going to get $10,000 for the spread, and then we'd lose $3,000 on the sale of the puts. We would be if it stays at 15, and we'd still net $7,000 back, and our outlay on this spread is only $650. So even if it doesn't make 17, we're still fine. Even if it drops $1 or $2, we're still fine. That's what I call a bulletproof trade, and I see no reason whatsoever they should drop.
All right, so what's the outsized risk? I mean, I know you kind of laid it out to say that there's, but what is one thing that could happen that you're not saying? It's like something, the stock goes way down.
Well, I mean, you look at 2020, and this was actually one of the reasons we were questioning it earlier on. It was really literally a week ago before we made the pick. China announced that they were going to do this additional stimulus that was right up their alley, and that's what tipped it back in their favor. But yeah, during COVID, they lost money because they still have to run their operation, and the demand wasn't there, so they started losing money. It could happen again. To say it couldn't happen again is foolish. But long term, do I care if I get 1,500 shares of Vale assigned to me at basically $17 net? No. It's still a great stock, and next year I can sell more puts and calls and lower my basis.
Yeah. Phil,
8% dividend.
It's the 8% dividend. Yes, that's certainly one worth mentioning, especially right now. Listen, great to talk with you. Great to connect on this, and I can't wait to see how this year pans out. Thanks so much for taking the time.
Oh, thanks for having me, Kim. I really appreciate it. Thank you.
We always do as well. That is Phil Davis. You too, Phil. That was Phil Davis, founder of philstockworld.com. And a reminder, do your own research, of course. You have to figure out what makes sense for you and your portfolio. That is our show for tonight. Any comments or questions, if you'd like to get in touch with an advisor, please email us at moneytalk@td.com. Thanks so much for watching. I'm Kim Parley, and we do hope to see you again next week.
The preceding paid commercial program was brought to you by TD Wealth.